As the earnings season comes to an end, investors are still on edge. Year to date, the Nasdaq is down 11.48% and the S&P 500 is down 6.52%. But you have to remember that for every trade, there's someone who takes the position that there's value in it for them. And that means that for some, stocks are cheap. In this video, I'm going to cover the 5 most undervalued dividend aristocrats today. If you're a dividend growth investor, you've likely heard of the dividend aristocrats. These are 66 companies that have increased their dividend for each of the past 25 years, and they're also listed on the S&P 500. And yes, the list is filled with snoozy stocks that for the most part, you may have never even heard of. And they won't have the huge swings, or at least they won't likely have the huge swings, like 25% in a day like Meta did that last week. But they do provide reliable dividend increases. There's 2 ways investors generally use to see whether a stock is cheap. One way is through the PE ratio. It's the stock price divided by its earnings per share. And the other way is by using a technical indicator, the 200-day moving average. And this indicator checks the average closing price of a stock for each of the past 200 trading days, or almost a year. Investors like the 200-day moving average as it can provide an indication of value. And while the PE might provide insight into what analysts think a company should be valued at, the 200-day moving average tells us what the market thinks. And as a result, well, I tend to prefer the latter. Here's an example of how the 200-day moving average works. And I'm going to dumb it down a little. Let's say you like to eat oranges, and about once a week you go to your local supermarket to buy some oranges, and last week they cost, let's say $3 a pound. And then you return the week after to buy more oranges, and now they cost $4 a pound. And then the week after, $6 a pound, and then maybe they go up to $8 a pound a week after that. In this case, you have 4 prices spaced a week apart, and if you average it up, you get $5.25 a pound over the period. So with that, you could say that if oranges cost less than $5.25 a pound, well, that's a good price. And the same folks, goes with stocks. And since you're looking for information on quality stocks, I wanted to introduce Dividend. Dividend helps investors like you and I find high-quality income securities for their retirement and financial freedom portfolios. And the Dividend newsletter analyzes their top 10 high-quality dividend growth stocks each and every month. And because they do such a great job, I want you to know that I use their service myself to research companies for the videos that I create here. And if you'd like to support the channel, check out the Dividend link in the description below. And stay tuned because I'll be giving you a promo code worth a $41 discount off their newsletter. Alright, so without further ado, the following 5 dividend aristocrats are trading well below their 200-day moving average. Medtronic was founded in 1949 as a medical equipment repair shop. They're the largest manufacturer of biomedical devices and implantable technologies in the world. Medtronic currently has 4 operating segments: cardiovascular, neuroscience, medical surgical, and diabetes. And today, Medtronic is one of the largest healthcare companies in the world. They're a large cap stock with a market capitalization of around 138 billion US dollars. On November 23, 2021, Medtronic reported second quarter fiscal year results for the period ending October 29, 2021. Adjusted net income was $1.792 billion, or $1.32 a share, a 29.9% year-over-year increase. Medtronic offered guidance of 7 to 8% revenue growth and earnings per share in the range of $5.65 to $5.75 for the full year. And the company's next earning release is soon on February 22nd, 2022. Medtronic has an impressive history of dividend growth. The company has increased its dividend for 44 years in a row. And with a current dividend yield of just 2.4%, it's not exactly exciting, but still it's better than many stocks. Medtronic shares currently trade for $101.99, representing a 15.87% discount from their 200-day moving average of 121.33. Stanley Black & Decker can trace its roots all the way back to 1843 when Frederick Stanley started a small shop to manufacture hardware made from wrought iron. In 1910, Duncan Black and Alonzo Decker began their business together and went on to obtain the world's first patent for portable power tools. In 2010, the two companies came together as Stanley Black & Decker in an acquisition worth $3.5 billion. Today, they have over 56,000 employees in over 60 countries, and they generate over $14.5 billion in annual sales. Its main products include hand tools, power tools, and related accessories sold under popular brands that include Stanley, Black & Decker, DeWalt, Craftsman, Irwin, Mac Tools, and Bostitch. Stanley Black & Decker has a fantastic track record of dividend payments. The company has paid dividends for 144 years and has increased its dividend for each year for 54 consecutive years. And that makes it both a dividend king as well as an aristocrat. The company released its fourth quarter and 2021 year-end results on February 1st, 2022. Earnings came in at $2.14 a share, beating the estimates of $2.06. And this compares to earnings of $3.29 a share a year ago. The company's last trading price was $160.95, and its 200-day moving average is $193.21. That means that against its 200-day moving average, the stock is trading around a 16.7% discount. VF Corporation is the next dividend aristocrat on the list, as it's increased its dividend for 49 years in a row. And I couldn't blame you if you've never heard of VF Corp. The company has a recession-resistant business and the ability to remain highly profitable even during economic downturns. This gives it the ability to continue raising its dividend each and every year, even when business conditions deteriorate. And by the way, one more year, and they too are a dividend king. VF Corp increases its dividend each year, including 2020, which was a very difficult year for the company and the broader economy due to the coronavirus pandemic. They're also a giant in the clothing industry. The company's annual sales exceed $10 billion, and they have a market cap of over $24 billion. The company pays $2 per share in annual dividends, representing a yield of just over 3%. On January 28, 2022, VF Corp reported solid third quarter fiscal 2022 results, where they beat both on the top and bottom lines. And despite the tough economic environment, the company found momentum across all of their brands. VF Corp's last trading price of $62.81 represents a 17.4% discount from VF Corp's 200-day moving average of $76.04. And another company you may not have heard of is Leggett Platt Incorporated. The company's a giant in their industry. In fact, you probably use one of their products each and every day. Leggett & Platt designs and makes various engineered components and products worldwide. The company operates 4 segments: residential furnishings, commercial products, industrial materials, and specialized products. Leggett & Platt currently pays an impressive 4.19% dividend yield on their common shares. Furthermore, thanks to the company's dividend-friendly management and durable competitive advantages, the company has raised its dividend for each of the last 49 years. And, as you guessed it, one more year and them too will make the coveted Dividend Kings list, a list of companies that have raised their dividend for 50 or more consecutive years. Leggett Platt reported fourth quarter earnings yesterday on February 7th, 2022. Revenue came in at $1.33 billion, ahead of estimates of around $1.29 billion. Further, reported earnings per share was 77 cents, while consensus estimates were around 73 cents a share. But year-to-date, the stock is down 9.29%, slightly underperforming the S&P 500 index. In fact, their latest trading price of $37.41 represents an approximate 20.2% discount over their 200-day moving average of $46.89. The last dividend aristocrat on the list is Rowe Price, a company that was formed in 1937 by Thomas Rowe Price Jr. Today, the company is a global investment management organization headquartered in Baltimore, Maryland. And the company has a market cap north of $33 billion US. The company provides a broad array of mutual funds, sub-advisory services, and separate account managements for individual and institutional investors, retirement plans, and financial intermediaries. In fact, most of Rowe Price's assets are invested in the stock market. January 2022 was a difficult month for Rowe Price, as much of the broader market. Rowe Price stock is down nearly 22% year-to-date, underperforming the S&P 500 during the same period. The company ended fiscal 2021 with $1.688 trillion under management, of which a significant portion includes tech stocks. And Rowe Price is famous for being an early-stage investor in some of the most promising startups. And yet, their current dividend yield of 2.77% is impressive for a tech-heavy portfolio. With the company's dividend-friendly management, the company has raised its dividend for each of the last 35 years. On January 27, 2022, the company reported its fourth quarter earnings. Adjusted earnings per share of $3.17 beat estimates and was 9.7% higher than a year ago. As of today, Rowe Price's shares trade at $151.84. And considering their 200-day moving average is 198.23, that's a whopping 23.4% discount over their 200-day moving average. And that, folks, makes Rowe Price Group the most undervalued dividend aristocrat today. So that's what I have for you today, folks. Do you own any of the stocks that I talked about? Let me know in the comments below. In the meantime, thank you so much for watching, and I'll see you in another video. Bye.